All right. So we have 1 minute to go. Neil,
Yes, ma'am.
Neil, Sagar, are you ready?
Yes, ma'am. I'm ready.
Okay.
I have to put my camera on, ma'am.
Not required. I mean, your choice.
Okay.
Siddharth, sir.
Good morning, Nikita. How are you?
Yeah, good morning. Very glad to see you after long.
Same here.
Okay. Good morning, everyone. Today we have with us Mr. Siddharth Mandalaywala, and he is going to talk to us about a very contemporary topic, that is stock market. You know, it has reached almost like a lifetime high, and that is 50,000 points. And the question in everyone's mind is like how to pick up stocks. So considering that, we have kept today's session topic as stock picking, art and science. So we'll know a bit more about Mr. Siddharth from Sagar. Sagar, over to you.
Thanks, ma'am. Mr. Siddharth Mandalaywala is a senior vice president and a fund manager at Concept Investment Private Limited. He has a work experience of more than 10 years in the field of capital market. An MBA with a specialization in finance, has a thorough knowledge about micro and microeconomic aspects. He's a very good at judgment and can take quick decisions. He's also a fund manager at Portfolio Management Services, where he manages Legends and Marvel. The Legend scheme managed by him is almost the topmost performing schemes in India. He has a skin in the game as he has invested all the saving into the equities. He has done MBA in the 7th-day Adventist College. Now I would like Mr. Siddharth Mandalaywala to guide us how we can see stock market and make decisions regarding that.
Yeah, thank you, Sagar. Thank you for the warm introduction. Nikita, I will like to share my PPT. So
Yeah, you can share now. It is enabled. Are you able to? Yeah, okay.
I hope everyone is able to see, right?
Yeah, it is.
Yes, sir.
Fine. So, good morning to all of you. I think that you must all be aware about our Indian stock market. And as Nikita said, we are at near 50,000 Sensex level. So it has created a bit of a hype. And also last year, post-COVID, many young people, many millennials have joined the stock market, and you can see it by the emergence of demat accounts being opened in India. So before starting, I would like to go with this one quote, which is from Mr. Nick Sleep. He was a fund manager. Now he is not a fund manager. And he gave this brilliant thought to Mr. Mohnish Obrai, who is again a fund manager. He said that truly brilliant investors weren't investors. They were entrepreneurs that didn't sell. So why I am giving you this quote first in the first slide? The reason behind this is that my investment philosophy believes in this thought thoroughly. So for example, I have been holding many stocks for the last 5 years, 10 years, 15 years. And I also believe that if we are an investor, we should try to think like an entrepreneur. because entrepreneur will never buy, sell his shares more frequently. He will be holding on his shares. So similarly, if you want to create wealth, and there is a beautiful quote by Mr. Charlie Munger, who is again a partner of Mr. Warren Buffett. He has also said that big money is not made by buying and selling. Big money in stock market or wealth is created in stock market only through holding. So when you buy or sell and do it frequently, your broker will earn, government of India will earn through taxes, but you will not make a huge wealth out of it. You can make an income, but you cannot make or create wealth. So I would like to highlight what Nick Slip did. In 2013, he invested his investors' money in just 3 stocks. And he was so comfortable with these 3 stocks that he was not selling even one share of this stock. So after a while, he thought that if I am not going to sell these 3 stocks, why should I take fees from my investors? So he wrote a letter to his investors, and at that time he was managing around $1.5 billion worth of asset. So he wrote to the investors and he said that I am giving you this money back because I am not going to sell these 3 stocks, and I don't want to take fees from you for not doing anything. So he redeemed and he gave all the money to the investors, and he said to his investors that if you want to be successful, just buy these 3 stocks and keep it for your lifestyle till your life. So in 2021, these 3 stocks which he bought in before 2010, and he was holding it till 2013, and he said to his investors that I will be holding it till life. The 3 stocks are, first one was Amazon, second one was Berkshire Hathaway, the company owned by Mr. Warren Buffett, and third one was Costco, a retail outlet, retail chain. So these 3 stocks outperformed every fund manager who were actively trading, actively buying and selling different scripts. And still these 3 stocks, if somebody had held, it outperformed like anything. So again, मेरा यहाँ पे कहने का मतलब यही है कि one should think like an entrepreneur and not as a speculator or a trader. So with this thesis, I would start my investment philosophy. So I have been into stock market for the last 15 years now, and I have also learned, I have also made many mistakes, and out of it I have developed one investment philosophy. And see, investment philosophy can also evolve. So if you will ask me after 1 year or 2 years, again there can be some change, because we all need to have an open mind. We cannot have closed mind, and we live in a dynamic world, so we need to change with time. So my investment philosophy dwells around these 4 things. The first one being huge external opportunity. Second, it should be a great business. Third, the management running that business should be competent, passionate, and ethical. And finally, it boils down to valuations. Now, in this chronology, I would like that you all be with me, because this is the way how we think at Concept. We don't go for valuations first. Generally, most of the investors make mistake because they go for valuation first, and then business, then external opportunity. And this is not the right way, because I have experienced many times that great companies will not come to you cheap. So valuation should come last. First should be huge external opportunity. Second should be great business. Third should be management, and then finally valuations. Of course, valuations should not be ignored. So I will now dig deep here in this 4 parameters. First one being huge external opportunity. So when you invest, you should first think of the industry, that how is the size of that industry? What is the size of that industry? So I have here quoted two examples. One is of welding industry and second is of jewelry industry. Welding industry size in India is approximately 1300 crores, just 1300 crores. And jewelry industry in India, the size is 3.5 lakh crore. So it's a huge industry, big industry. Any company which wants to become big should have a big opportunity size. And that is why you will never find a welding company coming in Nifty or BSE 100 or BSE 200, because the size of opportunity itself is very small. On the other side, India's number one jeweler, that is Tanishq, is now a Sensex company, is now a Nifty company. So it has made into Nifty and Sensex because the size of opportunity was huge for them. And even after being number one in India, their market share overall of the overall industry is just 5%. So you can imagine the number one player is just having 5% market share, and it is into Sensex and Nifty. So even if you check any of the Nifty stocks, for example, Infosys, TCS, why they are big? Because IT opportunity size is big. Again, pharma stocks, Sun Pharma, Lupin, why they are big? Because pharma industry across the world is big. Hindustan Unilever, FMCG sector is big. ITC, again, FMCG is big. Reliance, because it is into various sectors which are again big. So first important thing is the fish should be good. The quality of fish should be good, but it should not be in a pond. It should be in an ocean. Because if the fish is in ocean, then it has higher chances to become a big quality fish, and it will have much things to eat around. Now coming to the second point, that is great business. So what do I mean by great business? Warren Buffett in his 2006 letter defined three businesses: great, good, and gruesome. So we should not at all touch gruesome business. We should try to be in great business. So what is great business? Great business should generate return on capital employed above 15%. Now, why 15%? Because in India, cost of capital is around 11 to 12%. So your company should be able to earn a higher return on capital. So 15 minus 12 is positive 3%, which is nothing but cash flow. So if you do this analysis on Screener or any Excel sheet, you will find that 94% of the companies will get eliminated, because 94% companies which are listed in India does not generate ROCE above 15%. So your universe will come down to just 6%, and you have to hunt only from this 6%. Similarly, quality growth. See, growth is important, but it should be a quality growth. So again, what do I mean by quality growth? Conversion of operating profits into operating cash flow or free cash flow is nothing but good growth. So we have seen many times that companies do good net profits, but when it comes to cash profits, they are very poor. So accounting profit is not important. Cash profit is important. And that is why this criteria we should look at. Again, I will again cite you example of a company called United Spirits. United Spirits, in their last 2 or 3 con calls, they say that we are growing below industry rate. So suppose industry is growing at 5%, we are growing at 3%. So prima facie, what you will see that United Spirit is not growing that well. It is underperforming the industry. But actually, they say that we are doing quality growth. We are not chasing people where we think that receivables will not come. They will not sell their product to someone where they doubt that money will be received or not. So this is a good growth actually. Similarly, if you again remember Yes Bank. Yes Bank till 2017-18 was growing at 25-30%, and it was way above banking average. But ultimately what happened? That it was not a quality growth. They were giving money, lending money to corporates which were not that ethical, or maybe the business model was not good. So ultimately what happened? That money didn't come from them. And that is why that Yes Bank stock price went down from 400 to 10 rupees. And also today it is around 17-18 rupees. So for me, in my investment framework, return on capital employed and earnings growth are the most important things which we look at. Now, again, I would like to give this example that why quality is important for long-term wealth creation. And students, here I am not talking just about speculation or short-term thing, means 6 months or 1 year thing. I am talking about way, way long-term, 5 year, 10 year, 15 year, 20 years. There are investors who are in the stock market for last 30 years, 40 years. And I am going to give you one example also. So here, if you have two companies, company A and company B, company A is having a return on capital employed of 20% and company B is having 10%. Now, you are buying a company A at expensive valuation. That is, you are paying 4 times book value for buying company A. And similarly, when you sell it, you are selling it at cheap valuation. That is 2 times book value. On the other side, company B, you are buying it at cheap valuation, that is 2 times book value, and you will sell it expensive at 4 times book value. So can you guess which company will give you more returns? Company A obviously has a high ROCE and company B has a low ROCE. On growth parameters, I will say that both are growing at 15%. Company A is also growing at 15, company B growing at 15. But when it comes to valuation, company A, you are buying expensive and selling it cheap. And company B, you are buying it cheap and selling it expensive. So which company should have given better returns after 40 years? I have taken a long horizon.
Company B.
So here you can see CAGR of 18% from company A and just 12% from company B. So this is what I was trying to highlight, that quality is very, very important. Even if the growth rate is same, and even if you buy it cheap, then also return on capital employed is very important in long term. If the company is generating higher ROCE, you will generate huge wealth out of it. Now, these are some of the case studies, some of the examples where we need to look at their moat. So what is moat? Moat is nothing but competitive advantage. So here I have taken some examples that Hindustan Unilever or Nestle, they have a fantastic distribution network. Every year I go to Himalayas for trekking, and at the remotest village or hill, I will find Maggie over there. So Maggie is nothing but product of Nestle. So they have distribution network across India and even in remotest places. So this type of network is not easy to build. If somebody wants to compete with HUL or Nestle, they would need at least 4 to 5 years to build this type of network. And that is why these companies become big, and nobody is able to compete with them efficiently. Similarly, other moat we can say is high entry barriers. ITC and United Spirit. ITC manufactures cigarettes and United Spirit manufactures liquor. Now in India, government has given license to just 4-5 players, both in cigarette as well as liquor. So no other player will get license ever now. And that is why there is huge entry barrier. If somebody has big amount of money, for example, somebody has 5,000 crores, he would not be able to enter into liquor or cigarette because government will not give them license. And that is why the companies which are already there are able to mint money out of this competitive advantage which they have. Third thing is brand recall. The brand should be so dynamic that you go over there frequently. So I have taken here example of Tanesh. You can also take other examples like Eicher Motor Bullet. So the person riding Bullet will not go for an inferior bike after it. So this is the brand recall which happens with good brands, great brands. Similarly, logistics management. Dr. Lalpat, say this is a diagnostic company. So most people would be thinking that a diagnostic company, why it is about logistics management. But see, today, if somebody wants to do a blood test, then he has to go through a long process. For example, the person will come at your home, or you have to go to the diagnostic center to give your blood sample. Then there is a huge chain which goes on, and after that, you will get your result. So, Dr. Lalpat gives result within 24 hours or below that. So they have created such a moat, and that is why more and more people in North India, Eastern India prefer to go to Dr. Lalpat for blood testing. And even there are different other modes also with this business. I can say that this diagnostic sector, almost 75% is unorganized. Only 25 to 30% is organized. So still there is a huge catch up over there. Then comes high switching cost. I will cite you an example of Infosys, which has a software called Finacle. So I have my banking with Union Bank of India, which is a public sector bank. Now, as we all know that when we visit a public sector bank physically, they are not that much efficient, right? But when it comes to software, when it comes to their technology, they are very, very superior because Infosys is providing them that software. So Union Bank of India will not shift from Infosys to TCS just because of some cost. Because if they have to switch, then they have to again give training to their staff, and this involves a hell lot of exercise, right? So they will not go. They will be with Infosys for years and years. And I know that for, I think, last 7 or 8 years, Infosys has been their vendor for this software. So this is a high switching cost game, and that is why these companies earn annuity every year from banks. And finally, one more moat, that is low cost producer. The company which produces or manufactures a product should manufacture it at a low cost. I have given here example of Relaxo footwear. You must have seen advertisement of Akshay Kumar for that Sparks brand. Similarly, Salman Khan for Flight or Bahamas. So what this company is doing, it is playing on volume growth. Last year, it sold around 18.3 crore flip-flops. And per flip-flop realization was around 135 rupees. And they make a margin of just 4 to 5 rupees, not more than that. So on a flip-flop. So if a company is producing 18.3 crore flip-flops, then think that if they go to some rubber vendor and ask them to give them rubber, they would have a very, very good negotiating power. They would source it very cheap from that vendor. Similarly, when they hire Salman Khan or Akshay Kumar, the cost of Akshay Kumar or Salman Khan on their flip-flop would be much lesser than compared to any other new player which has come. Because if a new player comes, they will not be able to sell 18 crore flip-flop first year itself. They will take time, and that is why. And Relaxo can try and go for a higher realization also, but they are not going because they don't want competition to come in. Because as Jeff Bezos has said, that your margin is my opportunity. So if Relaxo goes in for a high margin product, then many competitors will come in and dislodge them. So they want to be a long-term player, and they are playing with a very thin margin kind of scenario, and they are prospering. They are doing well actually. Now, many people would have this question that why great companies get high valuations. So today in India, if you see Titan, this company is trading at around 60, 65 PE multiple. Nestle is trading at around 70 PE multiple. Asian Paints is trading at around 80 PE multiple. So why so expensive? So there are genuine reasons behind getting high valuations. The first one being resilience across multiple cycles. If you see Nestle product Maggie, you must be remembering that in 2015, Maggie was out of shelf because of that lead issue, right? But and market also was doubting that what will happen after this. But Nestle bounced back. There were many competitors like Yippee and Patanjali noodles and all that, but they were not able to again capture the market share and become number one. And again today Maggie is number one. So market also watches and observes that a company, even in their downfall, if they can bounce back like this, they will not give them low multiples. So a company having a resilience will ever always get high valuations. Secondly, predictability of growth. In market, visibility and predictability is very important. So if you had observed HDFC Bank, this bank consistently grows at 20%. Now it has come down to around 15%, but still 15% is a mark. They will never be below that, and market knows it. So any quarter results come, 15% growth is a must, and they are doing it. So that is why HDFC bank gets a higher valuation, higher price to book as compared to public sector banks. Similarly, third important criteria is adaptability to change. I have seen this company Titan. Titan earlier was a watch company, but it adapted and went into jewelry. Then it adapted and went into eyewear. Now recently they launched saris, Tanaira brand, and also they are into perfumes, deodorants, wallets, belts. So lifestyle related business, they are into every segment, and they know this very well. So company should be adaptable. They can't be fixated to one idea. Similarly, in Titan case, earlier they were making traditional watches. Now they are into wearables. Now they are into smartwatch. So this is also very important when you look at a company, that they should change with time. Fourth point is optionality to diversify into related business, new line of business. I will give you an example of Jubilant Food, that is Domino's Pizza. During COVID, most of the restaurants got impacted. Why? Because they only had physical setup. They were not able to deliver at home. But as we all know, that Domino's is dominant in delivering at home their pizzas, and that is why their profitability was not impacted that much as was with other restaurants. So you need to be very vigilant, and you should take optionality very seriously. You should have some optionality in your business, so that if any disruption come, you are able to change your gears, and again start doing your growth. Fifth point is continuous capturing of market share and profit share. This point is also very important. Most of us focus on market share, that ये company का इतना market share है, it is gaining market share every quarter or every year. But what about profit share? I would give you an example of Apple company. Uh, each one of us know Apple is manufacturing smartphones, right? There are other 999 players who are also manufacturing smartphones like Xiaomi, LG, Samsung, many players, right? Do you know what is the market share of Apple? It is around 16-17%. But do you know what is the profit share of Apple? Means the full industry is earning 100 rupees. What is the profit share earned by Apple? You would be surprised to know that Apple profit share is 82 rupees. So 999 players earn just 18 rupees and only one player earns 82 rupees, even after having just 16% market share. And that is why Apple is world's #1 company by market share, by market capitalization. So it is the most costliest company ever. And sixth point is management depth and transition. See, this is a very softer aspect of analyzing companies. Most of us believe that stock market is all about numbers. It is about science. But no, it is a combination of art as well as science. And as rightly put in by your teacher, Mrs. Nikita, that stock market, art and science. So here again, I would like to give you example of TCS. TCS in their last 45 years journey had just 4 CEOs, and very good transitions happen between the CEOs. And most of the CEOs come out of their own internal team. They don't have to outsource it from outside. So again, this is a good, this we can say that this is a quality of a great business. Similarly, I have seen with Titan. Last in 2019, Bhaskar Bhatt retired, and his successor was Mr. C.K. Venkatragman. And there was no change in the policy, no change in the vision. Everything was seamless. So this type of transition should happen. And the successor itself was with Titan from 1990. So see the experience. He was with Titan for last 30 years and he inherited from Mr. Bhaskar Bhatt. So this is what we need to see. The company should not be a one-man army, because if that one man goes, because anything can happen, right? So if that one man is not there, your company will be out. So that should not happen. Again, I would like to give you example of CCD, Cafe Coffee Day. After Siddharth, the MD, was not there, see what happened to that company. The company was very, I can say that it went out of flavor. Now, again, this is a very important slide. This is about Titan last 12 years. So in 2008, Titan was trading at 32 PE multiple. And in 2020, it is around 57 PE multiple. So most of us, what we think that most of the returns come out of PE re-rating, but it is not right. Most of the returns come out of EPS growth. So EPS of Titan, earning per share of Titan was 1.69 in 2008, and now it is around 17. So 17x jump in EPS, almost 15x jump in EPS. So CAGR, you can see that most of the return has come out of EPS growth and not out of PE growth. So you can see 19% of the return was made from PE growth, and whereas 81% came out of EPS growth. And total return was around 26.2% in last 12 years. So one thing everyone should remember, that earnings compound over time. Price earning multiple do not compound over time. So again, why quality? See, these are 3 players in jewelry sector: Titan, PC Jeweler and TVZ. You can see the profits, you can see the sales, and you can see the market cap. See the difference. There is a huge difference of market cap between Titan, PC Jeweler and TVZ. And see the returns also. PC Jeweler, being in the same industry, has delivered negative 40%. And Titan has given positive 33%. And TVZ has given just single digit return. Some additional factors which I would like to give is we like companies which do not require capital to grow. We like asset light models which start throwing cash. So now most of the new age businesses are like this. Even in US, if you see FANG stocks, Facebook, Amazon, Apple, Netflix, Google, Microsoft, these companies don't need capital to grow. And that is why they are free cash flow generating machines. We prefer companies which does organic growth over inorganic growth, because what we have seen that most of the acquisitions fail. It is said that 80% of acquisitions worldwide fail because of not matching of culture or overpaying of for that company. So organic growth is more preferable than inorganic growth. Of course, there can be exceptions. We don't like companies diluting their equity frequently. We like companies with no dilution. This is a very easy point. We like debt-free companies as debt kills in tough times like the current one. So company which had high debt on their books, and if suddenly COVID comes and the business has been shut for 2, 3, 5 months, then that company would be killed. So we generally prefer companies which are debt-free. And we like companies with a good history of capital allocation and capital distribution. See, your management plays an important role. If the company is generating free cash flow, operating profits are good, then how they are deploying it, where they are deploying it. So capital allocation and capital distribution is a vital factor in judging management. Recently, I went through this YouTube video of Mr. Utpal Seth. He is a CEO at Rare Enterprise. And he said these three things which are very, very important for today in India. So he said that what is happening currently in India happens only once in 2 or 3 decades. And we are in the midst of it. So the first one being displacement. India is shifting from unorganized to organized. So most of you must be doubting that why stock market is going up even though there is pain in the economy, right? This question must have arisen in you. The answer is unorganized sector is in pain, organized sector is not in pain. They are gaining market share from unorganized sector, and stock market represents organized sector. And that is why we are seeing that stock market is doing well, although when we meet our friends or any other people who are related with unorganized sector, they must be complaining about economy. They must be saying that dhanda nahi chal raha hai barabar, because they are in unorganized. So this is the change which is happening. Second change is weak business model to strong business model. As I cited you example of TBZ, PC Jeweler, I will put it in weak business model, and strong business model being of Titan, Tanishq. Third one being less competitive to more competitive. Again, this is a very easy point to understand that if you are less competitive, you will be out. Earlier, earnings growth used to come from inflation, rupee depreciation, and crony capitalism. This was past India. Now, in today's India, inflation has been curbed by this government. You can also see rupee is not depreciating that much. We are at around 70, 72, 73 levels. And there is very, very low probability of crony capitalism at higher ministries. So earlier, bad corporates, or even I can say that corporates were known for having their Swiss accounts, and they were proud of it. But now corporates get respect because they have a higher market capitalization, and that higher market capitalization is given by the market due to their good corporate governance, due to their good efficiency in the business, due to the moat in their business. So this is the change which India is seeing now. Second point is digitalization. Of course, we have to embrace it, and the companies who are early adopters, who are embracing the change, they are getting benefited out of it. Last year, during COVID times, Tanishq was selling its jewelry through video conference. So again, you can just imagine that how one is able to sell jewelry, which is a touch and feel product, through video conference. And they were doing it very well. Their growth, one of the company is Caratline. You must have heard this name. It has been acquired by Titan. So this Caratline has been doing phenomenally well last year. Their growth rates are way above 50%. Similarly, third point is disruption. Disruption is change in consumer mindset, changing distribution network, change in cost of distribution, cost of manufacturing. These are all important things which are happening. So if a business is disrupting itself and disrupting others, they are doing wonders. And we are seeing that new businesses are doing this. So these 3 points leads to higher terminal value. So when you do discounted cash flow, in that there is one thing which is terminal value. So these points give you a higher terminal value. And when you assign a higher terminal value, your price earning multiple will automatically go up. So all traditional ways of valuing stock will not work now. So this is again a very important thing which you should understand. So this is a quote by Mr. Rakesh Junjunwala that those who see the change, are prepared for the change and embrace the change will win in long term. So I think it is 10:40. I will still take around 10 minutes and then we can go for question and answers. So this is a very important slide. One of my friend highlighted to me that Infosys gave its best return during this years, 96, 97, 98, 99 and 2000. So you can see profit after tax in 1996 was just 21 crore and in 2000 it was 286 crore. And it was growing at, see the sales growth, 57%, 85%, 98%. As I said earlier, market likes two things, growth and ROCE. And you can see even ROCE of Infosys. It is way above 30%, 40%, 46%. So you can see the returns, that how much return. Share price was 1 rupee in 96, adjusted to bonus and split. Now it is in 2000 it was 167. So majority of the wealth was done during this period. So now where is the growth coming? Growth is coming in this type of companies. Paytm, Byju's, Ola, Oyo Swiggy, Zomato, these all companies are growing at more than 70-80%. Although they are still loss-making companies, but with scale, they can become profitable. So market will also identify this type of companies. Although these companies are not listed currently, but most of the companies have planned to list in next 1 or 2 years. Zomato has planned to list this year. Policy Bazaar has planned to come up with an IPO. So this type of companies we should closely look at. Although there can be many failures also out of this type of startups. These are all unicorn companies, but there are also many startups which can fail. But we need to again understand and do our due diligence. So at Concept, how we do? See, we have a team of 4 research interns. We have 4 research analysts. We have 1 head of research. The reason behind showing this slide is that we do many things, but when it comes to selecting company, we are very, very choosy. So you can see we attended 2,691 conference calls in last 4 years of different companies. We studied around 1469 annual reports. We did research on 283 stocks. We did research on 86 IPOs. We covered almost 42 industries. But when it comes to selection of stock in our portfolio, which we have 2 plans, that is Legend and Marvel, we bought only 12 stocks in last 4 years. So funnel is very wide at the top, but very, very narrow at the bottom. So finally, I would like to give you example of a very successful investor and how he lived his life. So this is a story of someone which I know very well. I have seen him from close corners. He must have invested in around 150 stocks in his life, but only 6 to 8 stocks have turned big. Big means multi-bagger, 10 times, 20 times, 50 times, 100 times, like this. So these are some of his winners: Kotak Bank, Madras Cement, State Bank of India, Bayer Crop Science, Lupin. His recent winners are Titan, Relaxo, Natco Pharma. So what he used to do from 1990 to 2003, he used to invest 10-20,000 rupees in IPO. Most of the IPOs he used to do it because he was not that much into stock market. He was running his own business, but the savings out of it, he would invest in IPOs. Half of the stocks which he invested gone bust. So I have seen this much of physical shares in his cupboard. It has no value today. The companies which survived gives dividend yield of more than FD. So the companies which are still there in existence, they give him dividend yield of more than fixed deposit. That is 8%, 9%, 10%. Capital appreciation in them is also decent. But he got one blockbuster out of that, and that was Infosys. In 1993, he applied for Infosys. At 9,500 rupees, he got 100 shares. And that 9,500 rupees is today 8.5 crore rupees. This is power of equity. This is what can happen if you are able to identify great business. He also was not knowing that Infosys would turn out to be a great business, but he had this habit to invest in companies and sit with that company, hold that company. So as I said, half of the stocks got killed. They have no value today. But there is one Infosys which has turned the corner. They probably, even he asked his relatives to apply for this IPO because he read one article on internet at that time in 1993 in Capital Market. And he thought that this internet can revolutionize the world. And this is what we are seeing today, right? So most of his relatives, they also invested, they got allotment in Infosys. By the way, Infosys IPO, there was full allotment because it got undersubscribed. So if you had applied for 1,000 shares, you would have got 1,000 shares. So most of his relatives sold out when the IPO, when the share price got 4 or 5 times, 4 or 5 bagger, then they sold it off. But this man didn't sell it. He held it. So what is important in stock market? Of course, management is important, business is important, price at which you buy is important, but self-discipline. If you are not self-disciplined, you will sell the stock. And if you sell the stock like Infosys, you would be repenting for your whole life. Again, one more example. He invested around 3 stocks in between 2006 and 2008. So he invested 5 lakhs in these 3 stocks. One is Punj Lloyd, one is Billcare, and one is Titan. So what happened? Punj Lloyd, he had to book loss at 53%. So his capital from 15 lakh turned to 8 lakhs and he had to book a loss. Similarly, in Billcare, he had to book a loss of 9 lakhs, 60% loss. But Titan, that 15 lakh turned to 4.9 crores. And even today, it is 4.4 crore. And he is holding it today. He has booked loss in Billcare and Punj Lloyd, but he is holding his winner, that is Titan. So you can see he lost 17 lakhs, but he gained 444 lakhs, that is 4.4 crore. That is CAGR of 17%, compounded growth of 17%, excluding dividend. So if you again add dividends of 18 lakhs, which is received, it comes to 462 lakhs. And dividend yield on that Titan investment at that price is today 10.3%. What does this mean is that if Titan share does not go up, still he receives 10.3% dividend yield on that Titan stock every year, which is much above than fixed deposits. So what to learn from him? That we have to sell our losers and ride our winners. And probability of getting right in stock market is 50-60%. In the above case, the probability of getting success was just 33%. Still, he managed to do very well. That is why I have written long live the stock market. See, this is the good thing which stock market gives you, that in spite of getting more failures than your success, you can create huge wealth. And the above example is up for that. So what this man achieved? He achieved financial independence very early. I remember at the age of 51, he was financially free. So he does what he loves to do. He is not slave to anybody. He does not have to work for anybody. He loves what he want to do. He is enjoying dividends. Most of the household expenses are taken care of by dividend income and not by capital appreciation. And he lives a very happy and peaceful life. So what we should learn from him? So one thing I have learned is simplicity. He never changed his lifestyle even after having ample money. So his net worth went up like anything, as you saw that what happened in Titan, what happened in Infosys. But still, he never changed his lifestyle. He is still frugal by nature, but he is happy. Inbuilt nature is to save and invest. So today, even the dividends which come, he would invest in new stocks because this is his passion. He never took cash calls, always remain invested. Stock market, we always think that election comes, what will happen? So we should take out our profits. If war happens, what will happen? If COVID happens, what will happen? So he never thought about all this. He just invested in good businesses and he remained invested. Regular investing helps, and regular investing whenever money comes. He had incorrigible faith in India and equity market. So this is the quality which every investor needs to have, especially equity investor. You should have faith in India and faith in equity market, because if you don't have faith, then there is fixed deposit for you to invest. Seen many bad cycles, but never got out of market. No debt in his most part of his career, and never went after name, fame, or money. So he is none other than my father. So I have given you example which I have seen, and I try to imbibe him. Uh, I think we are short of time, 10:51. Nikita, what should we do?
We can take up questions.
Okay, fine.
Yeah. So anyone who is having question may raise your hand.
Hello.
Yes, Kashyap.
Yeah, sir. So basically, I am very new to stock market, and recently I saw a series of scam Harshad Mehta, but I'm actually unable to understand what really happened during those times. So can you just brief me about the moment, what actually it was, in a summary point of view?
Uh-huh. See, actually, at that time, I was also not there because I was just 10 years old. So I also don't know much about it. I have also seen the series, and I can just say that the type of scam which happened at that time is not possible today. So in short,
Okay.
this is my answer.
Okay. All right.
And after that, SEBI came into existence. See, it is said that every adversity brings opportunity. So after that adversity, SEBI was established, and today I don't think so that any one individual can manipulate the market, because there are
Okay.
many forces in the market. FIIs are there, mutual funds are there, retail investors are there, big HNI clients are there. But no individual can determine a stock price. No individual can influence the stock price. Of course, in penny stocks, it can happen, but
Okay.
they ultimately go to Arthur jail after that.
All right, sir. Thank you. Thank you so much.
Nikita, ma'am.
Yeah, sir.
Ma'am, am I allowed to ask a question?
Yeah, please.
I was listening to the session. I found it very interesting. So this is Dinesh Panchal. I'm a faculty here, and also I invest for long term, mainly in mutual fund. But when I spoke to my RM, he told me that Dinesh, wait, right now FIIs are buying and DIIs are selling. So I got interested into this. So I just checked the trend of it. So I found FII investment and DII's investment net, let's say on monthly basis or whatever, it's exactly negatively correlated. And the stock market movement on, let's say, weekly basis or monthly basis is positively correlated with the FII's investing. So just right now we said, not one person, but if I say as a group, so I find that FII, when they invest, when they bring a money, they push the market up. And then at appropriate time, they go out. And when they go out, they pull the market down. So do we have to keep a watch on that as well?
See, of course, FII money is important because they are a big part of overall holding of any company. So in aggregate, if you see, 45 to 50% is promoter holding, 20 to 25% is FII holding, 10 to 15% is mutual funds, DIIs, and rest is public, right? So FII is a big chunk. And as you said that when they are buying, DIIs are selling. So see, DIIs are selling because they have redemption pressure also. Many people got stuck in stock market before COVID, and after COVID also they want to invest or they want to save their money in cash. So they redeem that money, and that is why DII has to sell. Again, market has gone up so much, so many people are circumspect that economy is not doing well and market is doing well, so it is right time to take money off the table. So there are many things we can say. And FIIs are investing because see, they are bullish on India. First thing, if you compare it with other emerging countries, India has got the highest inflow into 2020, even in 2021. Second thing is, worldwide interest rates are so low, almost nil. In US it is nil. In Japan it is negative. So think like a pension fund which is in US, it has to earn some money for its holders, right? Pension holders. So in US, if they are getting 0% interest rates, they have to come out and invest somewhere, and they are finding Indian market lucrative from that term point of view, because India is growing also. Indian companies, for example, Asian Paints, in Q3, it gave a volume growth of 30%. Asian Paint is a big, huge company and still growing at 30%. You will not find this type of companies anywhere in the world. Similar is the case with Infosys, TCS, pharma companies, Titan, many, many good companies, right? So, of course, FIIs are bullish on India. They are investing. And if you even check history of India, FIIs in India, in last 30 years, only I think 3 or 4 years they must have sold in India, big net selling in India. Otherwise, they have been net buyers all along. So I think 2008 they were net sellers. I think 2020 just in March month they were a big sellers. Otherwise, they have been buying big in India, and there can be a short-term correlation, but ultimately, see, we should not focus too much on all these things. We should focus on the business in which we are investing. How is the business? How are they going to do? What can be the opportunity? That will create wealth for you. My father never took cognizance of all these things. He just invested in Infosys and got updated on its quarterly results, annual reports, and what the company is doing. And ultimately, he created wealth.
Thank you, sir.
Good morning, sir. Neil here. Sir, my question is first, what is the Tata Alex's reason of rise that we have seen since last 1 year, and what the future holds for that the same? And new buzzword in the market is Bitcoin. So, what future holds for Bitcoin in India, Indian perspective?
Right. See, it would be difficult for me to give you stock-specific answers, but still I will try. For Tata Elxsi, see, they are into new age business. As you must be aware, they are into, for example, Jaguar Land Rover technology and stuff like that. So new age business market is currently giving premium to this type of companies, and even they have done well if you check their earnings also. So this is one of the reason. Other reason being, of course, Tata is a good brand. Tata is known for trust. Management is good, and of course, future looks very good for this company, and that is why it is going up. Even if you compare the peers of this company, that is Larsen and Toubro, LTTS is a peer. Even Scient is one of the peer, and these companies are also doing well. Coming to Bitcoin, see, I don't have much knowledge on it, and I have never invested in it. I can just say that what I feel is government will not like to give away their power to something like this cryptocurrency. Currency. They would like to retain their power. So I doubt that how this will go.
Okay, thank you, sir.
Okay, we can have last question.
See, I am available. If you all want to ask any questions, I am still available.
Sir.
Yeah,
Yes.
yes.
Sir, yes, sir. Sir, if any investor has opened that demat account through discounter broking companies, and that investor is likely to hold that shares for long term period. So is it viable to hold those shares through discount broking companies? So is it good for to hold because
Yeah,
there is
got your question. Yes, got your question. So you are doubting about the credibility of that firm, right?
yes sir, exactly.
Huh.
Yeah.
See, first of all, the demat account which you open with any of the discount broker is with CDSL or NSDL, and these are governed by government of India. So
True
that,
sir. Yeah.
so there is no, you should not be scared about it. And
Okay sir.
this comes under SEBI, CPSL, NSDL, this comes under SEBI. So there is no issue. You just need to see that when you buy a share, it gets transferred to your demat account or not. If it is not getting transferred, then it is an issue. But if it's getting transferred and you are checking your monthly statements and it is reflecting in it, then no need to be worrying about it.
Yes sir. Thank you sir.
And one thing I would like to tell you, Yash, that you should also nominate someone in your demat account, because in this discount brokers, there is just one person opening that account and nobody knows about it. So you should have a nominee with you so that anything happens to you, then the nominee can claim it easily.
Okay sir. Yes sir. Thank you sir. Thank you so much sir.
किसी को भी
Okay.
कुछ भी पूछना हो पूछो बिंदास.
I think Aditya, you had a question.
Yes, yes, ma'am. So, Siddharth sir, I just wanted to ask that, I mean, what could be other ways of getting more knowledge about a particular stock or a company? Besides, I mean, everything is available on the internet, right? But what if you want to go beyond those? I mean, something very, vital or which is hidden or something like that.
See, vital thing is experience. So you need to go through different cycles of stock market, and that is how you will learn. Experience is the best teacher. Otherwise, as you said, everything is now available. So I never go by any insider information or promoter meeting me and giving me some insider thing. I don't want also. I will go with a company who is transparent, who is giving information in public domain, and everybody is able to capture that information and analyze it. So different thing is how you analyze that company. For a particular company A, I can be bullish and you can be bearish. So this is the difference which is happening in the market, and that is why buy and sell trades are happening. And as Dinesh sir told that FIIs are buying, DIIs are selling. Every time this is going to happen ना. एक जन buy करेगा, एक जन sell करेगा, तभी तो stock market चलेगा ना.
Okay, sir. Thank you.
Hello.
Yes, Kashish.
Sir, as if I give you example of TCS, that at current level at 51,000 of Sensex, it seems like it is costly share, right? But now if we take into account 5 years of horizon, then what will you consider that? Will it be a pricey stock? So now how to select a stock? Because at the current level, it is pricey, like it's overpriced.
See,
But
first
when we looked at 1 lakh Sensex, then at that time we will be regretting, yeah, at 2,000 we are having a good stock amount.
right. See, first of all, Kashish, I will say that what is pricey and what is not pricey, who will decide? So for you, it can be pricey. For me, it can be cheap also. Na? So beauty lies in the eyes of the beholder. So even see, you must have seen FII or even mutual fund reports on the same company. One is giving you a buy rating, other company is giving you a sell rating. So both have different perspectives to it. So we need to have our own perception coming through our research. And if you are bullish on IT sector as a whole, if you think that this company, what it has delivered, it can deliver a higher growth rate. See what the change is happening in IT sector is now they have shifted to digital. Earlier they were into coding and all that. So now digital is the new game, machine learning, artificial intelligence and all this stuff. So now they have started to grow at 25-30% in this digital domain. For example, Infosys 50% of the revenue comes from digital, and digital itself is growing at 25%. So if you feel that this can continue, then I don't feel that valuations are too expensive. Of course, they have moved up, but I feel that still it can give you double-digit returns.
And one last question: what do you think about Sensex at the rate 1 lakh?
See, everything is possible, and Sensex 1 lakh is easily achievable in next 4 to 5 years.
Okay, sir. Thank you.
See,
Oh, that's a
I will give you reason behind it. I am not just bluffing that Sensex will be 1 lakh. See, our GDP growth, I feel that in next 5 years it should average around 7-8%, right? This is real GDP growth. Plus, if you do add inflation, so inflation you can take 5-6%. So 8 plus 6 comes to around 14%. This is nominal growth. Generally, what we have seen that corporates grow above nominal growth. So if country is growing at 14%, corporates would grow at around 16, 18, 20%. So if you compound this for next 5 years earnings, then easily in 5 years our earning per share will double. And if earning per share will double and PE remains constant, then of course our Sensex can hit 1 lakh rupees. So coming again to this EPS, see in last 5 years, India has taken major reforms, be it GST, be it demonetization, be it RERA, be it IBC. So this was all nothing but doing operation on our country. And after we have been operated, now it is time to gain results from these reforms. And so I think that next 5 years should be more productive, should be more efficient, should be we can expect that we will get more returns in next 5 years than we got in last 5 years.
So can we say that from Sensex to reach at 50,000 from 25,000, it took 7 years, right? And if we see history of Sensex from 1985 to 2020, so it's almost 30 years.
Right.
And in CAGR of Sensex is around 14.5% approx.
Correct.
So in order to reach this 30 years of 25,000 to 50,000, in this whole span of 30 years, Sensex has seen 7 crises, from dot-com crisis to COVID pandemic. So can we expect some more crises like this in coming years, or should we possibly think on invest based on that?
See, crises can always come. My father has seen 1993 Harshad Mehta scandal. My father has seen 1997 South Asian crisis. My father has seen 2000 dot-com bubble burst. Then 2002 World Trade Center terrorist attack. Then many floods, many famines, many natural disasters. 2008 world's biggest financial crisis he has seen. Then again 2020 COVID he has seen. So he has seen everything, and yet he has made immense wealth. So focus on stocks, don't focus on Sensex, don't focus on too much on economy. This is all analysis paralysis, nothing you will gain out of it. This is good for knowledge.
Thank you, sir. Thank you.
Sir?
Yes, sir.
Sir, I am just having a question. Like, if we see some of the stocks in the market, the company is not performing at well, or some of the companies are bankrupt and they are going into the NCLT. But then also their stocks are fluctuating as much. If I take an example of Jet Airways, it was around 15 to 20 rupees 4 to 5 months back, but now it is trading at around 115 or to 120 rupees. So, sir, what could be the reason for that?
Speculation. One word answer: speculation. Even if you have seen, this is the same thing happening in US also. GameStop and all that stuff which has been happened, even to some extent we can say for Bitcoin. So see, stock market does not mean that only long-term investors are there. There are many traders. There are many speculators. Future and option is all about trading. So prices would be volatile. If you see any company's 52-week high and 52-week low, there would be a vast difference. Why there is a vast difference? Fundamentals are not changing daily, right? But still, price of one company 52-week high would be 100 and 52-week low would be 50. So the difference is because of immense volatility, immense short-term price fluctuation, and speculation.
So, sir, if I say about this particular stock, if it is going up, it is basically in the upper circuit, and then coming down, it is also in the lower circuit itself. So, is that the sole reason for the speculation for this?
See, too much volatility is actually not good. So Jet Airways में अगर ये हो रहा है तो ये बहुत speculative है, इसीलिए हो रहा है. And stay away from companies like this. तुझे पता है कि Jet Airways का एक भी plane नहीं उड़ रहा है, तो हमें क्यों उड़ना है फिर उसके पीछे?
Right, sir. Right. Thank you, sir. Thank you.
इसलिए मैंने सबको बोला कि सी बिजनेसों को देखो. तनिष्क मैंने लिया है, टाइटन मैंने लिया है, तो मैं दुकान में जाके देखता हूँ कि भाई बिक रहा है माल के नहीं बिक रहा है. तो इसलिए B2C बिजनेसेस पे ज्यादा फोकस करो. यू आर ऑल कॉलेज स्टूडेंट्स, so you should focus more on companies के जो तुम्हें दिख रही है, विजिबल है कि इसके प्रोडक्ट्स बिक रहे हैं, तो वहां पे आप अच्छा कर पाओगे, rather than ऐसी कंपनीज के जो स्पेकुलेशन की वजह से ही चल रही.
So, sir, there can be reason that the news that are coming back to back, that in the next 4 to 5 months that the Jet Airways will be back. So can it? So this is the
don't focus on news. Focus on core earnings. News तो आते रहते हैं, जाते रहते हैं, तो वहां पे फोकस मत करो.
Okay, sir.
मैं 2 साल से सुन रहा हूँ जेट एयरवेज उड़ने वाला है, लेकिन उड़ ही नहीं रहा.
Okay, sir. Okay, thank you so much, sir.
Nikita ma'am, may I ask a question?
Yeah, ma'am, please.
Hello, sir. Unfortunately, I am way behind all these students in terms of financial terms and understanding the nuances of stocks and other things. But I've always been very fascinated. One of the major reasons being that I met a person very long back, and he used to tell us, me and my friends, that he never went to school, never studied, had a formal education, but made his house, car, and a lot of wealth because of investing and in the share market. So that was one very fascinating element. However, I have never done any trading. So I wanted to know, as a beginner, somebody who does not understand ROCE or COC or anything of that sort, what do I need to know if I want to think of, investing or trading or anything of that sort?
Okay, very good question, madam. See, you can start with simple SIP, systematic investment plan in mutual fund. For this, you don't need to have any knowledge, right? So this is the one way you can start. Mutual funds even have given very good returns as compared to fixed deposits or real estate. And see, first thing which I want to tell you, everyone, is consider equity as an asset class and not as a speculative asset. So आज लिया कल बेच दिया, 10% 20% रिटर्न आया बेच दिया. Don't do like that. इसको भी एसेट की तरह समझो. हम घर लेते हैं तो घर लेने के बाद हर रोज ब्रोकर को फोन करके पूछते हैं कि भाई आज मेरे घर का भाव क्या है, चलो आज भाव बढ़ गया है तो मैं मेरी बालकनी बेच देता हूँ, मेरा कंपाउंड बेच देता हूँ. हम नहीं करते हैं वो. तो रियल एस्टेट हम 25 साल होल्ड करते हैं. गोल्ड, यहाँ पे काफी वुमन भी है, तो यू ऑल नो कि गोल्ड आपने रखा है तो आपने पैसा बनाया है. तो वाई स्टॉक मार्केट हम 5 दिन के लिए रखते हैं या 50 दिन के लिए रखते हैं या 1 साल के लिए रखते हैं, वाई उससे ज्यादा हम होल्ड नहीं कर सकते. मेरे फादर 35 ईयर से स्टॉक मार्केट में एंड फुल्ली इन्वेस्टेड है. ऐसा नहीं है कि कभी उन्होंने घर पे पैसा लेके आए. कभी कोई बार जरूरत होती है, कुछ घर में कोई बड़ा फंक्शन है या इसलिए पैसा निकालना है तो निकालते हैं, पर अदरवाइज ही हैज बीन ऑलवेज फुल्ली इन्वेस्टेड इन स्टॉक मार्केट. तो स्टॉक मार्केट को इस नजरिए से देखने का शुरू करिए, ये मेरा पहला पॉइंट है। दूसरा पॉइंट यंग स्टूडेंट्स के लिए भी मैं ये बताना चाहता हूँ कि कंपाउंडिंग इज द 8th वंडर ऑफ द वर्ल्ड। आप जितना जल्दी चालू करोगे उतना जल्दी आप फाइनेंशियली फ्री होंगे। आज आपने मुझे बुलाया है तो मैं आपको एक टिप देता हूँ सबको फाइनेंशियल फ्री होने के लिए। 20 ईयर का ये टिप है मेरा। 20 ईयर्स तक आप जब भी कमाना शुरू करो, एवरी मंथ 40% ऑफ योर सेविंग्स इन्वेस्ट इन इक्विटीज। इक्विटीज यानी डायरेक्ट शेयर भी हो सकता है या म्यूचुअल फंड भी हो सकता है या कुछ और जरिया भी हो सकता है। 40% of your savings start investing in equities every month. Do it 20 ईयर के बाद कोई भी एक भी जन बंदा ये मुझे नहीं बोलेगा कि मैं सर नहीं पैसा बनाया, वो फाइनेंशियली फ्री हो जाएगा। पर ये डिसिप्लिन ही नहीं है हम किसी में, इसलिए हम पैसा नहीं बना सकते। एक दूसरा आपको देता हूँ, एवरी मंथ इफ यू इन्वेस्ट 10,000 rupees in a mutual fund and if you get 12% compounded return over 20 years, that money would be 1 crore। और लाइफ में पहला करोड़ बनाना ही बहुत डिफिकल्ट है। जो बंदे ने पहला करोड़ बना दिया फिर उसका वेल्थ बहुत फास्ट बढ़ेगा क्योंकि कंपाउंडिंग इफेक्ट आएगी। तो पहले करोड़ के लिए थोड़ा फ्रूगल होना जरूरी है, थोड़ा डिलेड ग्रेटिफिकेशन करना जरूरी है। सी विराट कोहली क्यों आज विराट कोहली है? क्योंकि वो सुबह 4 बजे उठ के खेलने जाता था जब उसके फ्रेंड्स बिस्तर पे सोते थे मस्ती से। वो रात को पार्टीज अटेंड नहीं करता था, उसके फ्रेंड्स पार्टीज अटेंड करते। तो हमें कोई ना कोई सेक्रीफाइस देना है फाइनेंशियली फ्री बनने के लिए। तो इनिशियल पार्ट में हम लोग महंगे गैजेट्स ले लेते हैं, डेप्रिशिएटिंग एसेट्स ले लेते हैं, हाई एंड कार्स ले लेते हैं, इसलिए हम फाइनेंशियली फ्री नहीं होते हैं। और फिर हमेशा हमारी लाइफ हम बैंक के लिए जीते हैं, ईएमआई भरते रहते हैं। तो वो टाइप की लाइफ अगर नहीं जीनी है तो इनिशियल 20 ईयर्स में ऐसा नहीं है कि मटीरियल चीज से ही आपको हैप्पीनेस मिलती है। हम लोग अभी बात कर रहे हैं, कोई पैसा इन्वॉल्व नहीं है, पैसे की बात हो रही है, बट एवरीबडी इज हैप्पी करंटली, राइट? तो हैप्पी होने के लिए ऐसा जरूरी नहीं है कि मेरे हाथ में सोने की घड़ी हो या फिर ज्वेलरी हो, या उससे नहीं हैप्पीनेस मिलती है। हैप्पीनेस कैन कम फ्रॉम विद इन, और इसके लिए डिलेड ग्रेटिफिकेशन इज वेरी इंपॉर्टेंट। सो प्रैक्टिस दैट। फॉर मैडम आई विल से स्टार्ट एसआईपी, और जैसे जैसे आपकी इनकम बढ़ती है उसमें एड ऑन करते जाइए। 20 ईयर के बाद आई बेट कि यू ऑल विल बी फाइनेंशियली फ्री इवन एट 12% कंपाउंडेड रिटर्न, और उससे इंडिया रिटर्न ज्यादा देने वाला है, वो भी मैं आपको बता दूं।
Thank you so much.
Sir, can I ask one more question?
Yes, Kashyap.
Okay, sir. So as I am very new to stock market, and as I see there are several giants which are coming up in Western countries like in Amazon, Google, Netflix, and all those companies. So is there any way to invest in those companies through being in India?
Yeah. You can consult some brokers. वो Google पे आप सर्च करोगे तो मिल जाएगा, कोई ना कोई ब्रोकर है जो आप US stocks भी even buy कर सकते हैं।
Okay, so it's not necessary.
If you don't want to buy directly, then you have mutual funds also जो US stocks में invest करते हैं। जैसे एक मैं आपको स्कीम बताता हूँ, पराग परिक लॉन्ग टर्म इक्विटी फंड। वो लोग 35% US में इन्वेस्ट करते हैं, यानी आउट ऑफ इंडिया इन्वेस्ट करते हैं। तो उनके पोर्टफोलियो में अल्फाबेट है, दैट इज गूगल, फिर उनके पोर्टफोलियो में फेसबुक है, उनके पोर्टफोलियो में माइक्रोसॉफ्ट है। तो जो कंपनी हम यूज कर रहे हैं वो सब उन्होंने ले रखी है। तो यू कैन इवन हैव इनडायरेक्ट एक्सपोजर टू म्यूचुअल फंड्स।
So we don't have to have citizenship. मेरे को ऐसा था कि citizenship चाहिए होता है।
हाँ, कोई जरूरी नहीं है। और अभी तो मैं मानता हूँ नेक्स्ट 2-3 ईयर में सब ओपन अप हो जाने वाला है, यानी यू कैन इन्वेस्ट एनीवेयर इन द वर्ल्ड।
Okay, sir. Thank you.
Sir?
Yes, Kashyap.
People are the RM who are with us, they say that this is the best time to buy, but no one says that this is the best time to sell. So in that case, how do you consider as an individual?
See, स्टॉक मार्केट में पैसे बनाने के बहुत सारे तरीके हैं। मैंने आज जो आपके साथ डिस्कस किया वो एक तरीका था, राइट? मुझे भी सेल करना नहीं आता है, इसलिए मैं भी ऐसी ही कंपनीज लेता हूँ जो मैं लॉन्ग टर्म होल्ड कर सकूं। आई नेवर इन्वेस्ट इन सिक्लिकल स्टॉक्स। ये सिक्लिकल स्टॉक में जैसे तूने बताया ना कि बाइंग प्राइस भी इंपॉर्टेंट है और सेलिंग प्राइस भी इंपॉर्टेंट है। अभी उसके सामने आई एम अगेन गिविंग यू एग्जांपल ऑफ टाइटन। आई एम होल्डिंग इट फ्रॉम 2006-07। आज तक मैंने बेचने की मुझे जरूरत ही नहीं पड़ी है, क्योंकि एवरी ईयर में देखता हूँ दे आर गेनिंग मार्केट शेयर, वो लोग अच्छा ही कर रहे हैं, प्रॉफिट्स भी बढ़ रहे हैं, तो व्हाई टू सेल? तो सेलिंग ऐसी चीज है कि वो भी सब्जेक्टिव है। हमारे केस में हम सेल कब करते हैं, जब हमें लगता है कि वी हैव मेड अ मिस्टेक, हमने जो थीसिस सोची थी वो नहीं हो रही है पैन आउट, तो इट इज टाइम टू सेल। दूसरा कि वो जो प्रमोटर है वो ऐसी कुछ चीजें कर रहा है जो अनरिलेटेड एरिया में एकदम जा रहा है। जैसे यूनिटेक कंपनी एक थी, वो रियल एस्टेट में थी एंड इट वेंट टू टेलीकॉम। तो अभी कहाँ रियल एस्टेट, कहाँ टेलीकॉम, कोई नॉलेज नहीं है, फिर भी चला गया वो। तो ऐसा कुछ करता है तो इट इज अ रेड फ्लैग। फिर तीसरा होता है कॉर्पोरेट गवर्नेंस में कुछ इश्यू हुआ कि भाई माइनॉरिटी शेयर होल्डर के साथ उसने कुछ गलत किया, तो अगेन इट इज अ रेड फ्लैग, तो वहां से हमें निकल जाना चाहिए। यानी मैं ऐसा मानता हूं कि जो कंपनी अपने कस्टमर को खुश रखती है और अपने एम्प्लॉयज को खुश रखती है वो जनरली वेल्थ क्रिएटर बनती है। लेकिन जो ऐसा हम बोलते हैं कि जो बंदा हमारे लिए चोरी करता है वो कभी ना कभी हमारे पास से भी चोरी करेगा, तो ऐसी कंपनी से हमें दूर रहना है।
Thank you, sir.
All right. Okay. I think we can wrap up now.
और आई विल लाइक टू ऐड कि निकिता मैडम के पास भी टाइटन है, तो उनसे आप पूछो।
So I mean, I owe a lot of my philosophy, my investments, guidance, obviously to him. I have worked with him for a short period, but then whatever I have learned, it still holds true. So I owe this thing to you, and thank you very much for sparing time. And it was a great session, because nobody talks about the way in which you talked about wealth creation. So thank you so much. Let me ask Shikha to give a vote of thanks.
निकिता, बिफोर जस्ट साइनिंग ऑफ, कशिश का जो क्वेश्चन था उस पर एक थोड़ा बोल देता हूँ कि कोई भी आरएम आपको कुछ बोले ना उसको बिलीव ही मत करो। सी आरएम के पास टारगेट्स होते हैं, इसलिए आई ऑलवेज बिलीव कि स्किन इन द गेम होना बहुत इंपॉर्टेंट है। तो मेरे को अगर कोई बोलता है कि सर ये मुझे इस कंपनी अच्छी लगती है लेने का, तो मैं उसको पहला क्वेश्चन ये कहता हूँ कि तूने ली है और तेरे पोर्टफोलियो में कितना वेटेज है उसका। तो स्किन इन द गेम अगर है तो ही उसको बिलीव करो। बाकी मोस्ट ऑफ द पीपल जो टीवी पे भी आते हैं दे डोंट हैव स्किन इन द गेम। वो लोग फिक्स डिपॉजिट में इन्वेस्ट करते हैं लेकिन टिप हमें शेयर्स की देते हैं, तो वहां पे वो पूरा मिसमैच हो जाता है और वेस्टेड इंटरेस्ट अलग होते हैं उनके। तो डोंट गो फॉर ऑल दिस पीपल। इसलिए मैंने जैसे बताया, आई जस्ट राकेश झुनझुनवाला फॉर एग्जांपल, तो ही हैज स्किन इन द गेम, उसके पास है टाइटन, हमें दिखता है उसका बीएससी शेयर होल्डिंग में, आप जाके देखो तो दिखेगा। तो ऐसे बंदे पे ज्यादा रिलाई करो रादर देन कोई भी टीवी पे आके कुछ भी ब्लफ कर दे और हम उसको मान ले।
बट सर वो भी उसमें भी ऐसा होता है कि जब सर राकेश झुनझुनवाला जब परचेस करते हैं तब वो हेडिंग्स आती है, और जब सेल करते हैं ना तब एक 1 वीक के बाद आता है, तो वो हम मिस कर जाते हैं।
ओके, पर सी अपने को ऐसा क्लोनिंग करना ही नहीं है, ऐसी चोरी क्यों करनी है कि भाई वो ले तभी अपने को लेना है, वो बेचे तभी अपने को बेचना है।
आई एम जस्ट टॉकिंग अबाउट जनरल सिनेरियो ऑफ द मार्केट।
सी मैं ऐसा मानता हूँ, आई एम नॉट अगेंस्ट क्लोनिंग। जैसे टाइटन मेरे पोर्टफोलियो में भी बिकॉज ऑफ राकेश झुनझुनवाला आया था, वो आइडिया जो पहली बार आया वो बिकॉज ऑफ राकेश आया, लेकिन फिर वो कंपनी को मैंने अपनी बना दी और फिर मैंने उस पर इतना अच्छा रिसर्च किया, और आज अभी राकेश बेचता है कि नहीं बेचता है इट डज नॉट कंसर्न मी। मेरा थीसिस, मेरा एनालिसिस ही इतना अभी अच्छा हो गया है, रिसर्च अच्छा हो गया है कि आई डोंट नीड टू रिलाई ऑन हिम। तो ऐसा हमें करना है लाइफ में कि कोई आइडल है उसका फॉलो करो लेकिन कंप्लीट फॉलो मत करो, बस वो है।
श्योर, थैंक यू।
ओके, थैंक यू निकिता।
Shikha.
Yes, ma'am.
Yeah.
I, on behalf of management at NUB, would like to thank you very much, sir, Mr. Siddharth Mandalaywala, for giving us an excellent understanding on the topic stock picking, as how it's not about just numbers, it's a combination of art and science both. As you started with stating that one has to think like an entrepreneur and not as an investor so that he can make decisions well. And further provided an important insight on stock selection method and stated that the growth is important, but it should be quality growth, and accounting profit is not important, cash profit is important. With an example of United Spirit and Yes Bank, you gave some case studies in form of moat and competitive advantage, explain the current stock market scenario, and gave many more real examples. So thank you so much, sir, for giving us your time.
It was a privilege, and I liked the quality of questions which were being asked. So I'm also equally happy. I learned a lot from all of you. So thank you very much. Thank you for inviting me.
Thank you once again. Thank you, students, for being patient listener, and I'm hopeful that it is going to fructify idea in your minds to go ahead in the path of wealth creation rather than short-term gains. Okay, thank you very much once again. Thanks a lot. Okay.
Okay, fine. Bye.
Bye-bye.
Bye, sir. Thank you.